Good evening. My name is Peter Resnicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly for Sunday, June 14th, 2020. I decided to call the video this week Shifting Gears because I felt like the market really shifted gears on us in a major way. If you were watching closely, obviously you probably saw the huge rout that we had on Thursday. We had some wild action on Friday as well that kind of confirmed that selling. So the market really did shift gears. And I thought when I was making this video, given how heavy the selling was on that Thursday, I thought to myself, there had to have been a lot of traders caught long who were liquidating on that Thursday. But I wasn't. I actually was able to sell out all my longs. I had a lot of stuff long on Wednesday afternoon before that day, and I actually got out of everything with a profit, and it worked out really well. And I'm going to show you in this video the exact thing on the charts. It's just one technical event that I want to share with you that tipped me off to the fact that we were dangerously overbought and I should probably trim. Did I know that the selling was going to be that crazy on Thursday? I didn't, but it doesn't matter. The fact is I was signaled before it happened. I took the signal, blew out of my longs, banked that money, and then came into the market mostly flat on Thursday, and that really made all the difference. Market internals on Thursday were epic. I'm going to show you a snapshot of just how bad it was so you can kind of juxtaposition that with what it would look like on a normal day. This will also teach you a lot about how you should be comporting yourself, for lack of a better word, on trend days. A lot of people email me all the time asking, how do I know when it's a trending day and when it's not a trending day? What are the types of days where I could get short early, like before 10 a.m., and hold that short all day long? So I purposely took a snapshot of those epic internals on Thursday so you can see what under the hood looks like on a trending day, all right? All of that is going to lead us into the trade of the week this week. Once again, I'm going to select something from the weekly options. It's going to be interesting, though, because leading up to that Thursday rout, as I was saying, I came in heavily, pretty long. We closed 6 winners in a row. Boom, boom, boom. All the long stuff closed. Had a great, fantastic week with the subscribers. But I'm not going to talk about any of those winning trades. I'm actually going to talk about a losing trade, which I put on Friday, where I was setting up for short action next week. I had a signal that I'm going to show you exactly from start to finish how this laid out. I thought the market could be down more next week, and then I closed the trade at a small loss, ended up scratching it. I'm going to walk you through the whole thing and show you my exact mindset of what got me thinking that the market should go down further next week, and then what exactly changed my mind, get out of that trade for a small loss, of why I'm not so sure right now that the market is actually going to go down next week. All right, without further ado, let's get into it. All right, so kicking it off as we usually do here with the majors, SPX, NASDAQ 100, and Russell, just to see what technical damage, if any, was done by the Thursday-Friday activity. So you can see here that obviously this is the huge gap down and follow through in the SPX. We did breach trend and close below trend, and we also had 2 instances of touches below and 1 closing of the 200 period moving average. So that is important. I'm a big believer that these 200 MAs often take time to resolve, so it could just be that. But when all was said and done, the SPX did close below trend. So carry that forward. That is important. All right. I'm going to move to the Russell next. I'm actually going to leave the NDX for last because the NDX is actually the chart that I want to most share with you, and you'll see in a moment why. All right. Russell, again, same activity, a little bit stronger on Friday with a green candle, but notice still plenty of downside room to maneuver until we hit that key 50-period moving average, which, by the way, if I didn't mention it a second ago, I'm not sure, I don't think so, that SPX has the same exact thing. So if we are to see a little bit lower levels in the S&P, we're probably going to see that 50. All right, now let's get into the NDX because this is where things get very, very interesting. And if you recall, in the introduction to the video, it was actually this chart that gave me the heads up to exit longs on Wednesday. And I think astute traders who are, really cracking with their technical analysis will know just by looking at that chart what it was earlier this week on Wednesday that got me a little bit spooked. And it was basically this Wednesday candle and the fact that it was pushing hard outside of the channel. It's very, very important. Channels are extremely important. Trend lines are extremely important. I mostly just trade off of trend lines, channels, and horizontal lines. As you know, I like to keep it simple. I'm not an indicator person. I don't really do anything too fancy. I'm a big believer that trading is really mostly about process and discipline. And you don't really need fancy indicators or even fancy strategies to be consistent. You just have to have the discipline to basically follow your plan. Try and do the right thing at the right time as often as you can, but more importantly, not do the wrong thing at the wrong time, which is really where problems occur. But anyway, the candle pushing outside of the channel is a very, very important signal that not necessarily that the market is about to break, but you need to be pulling back from longs. And this is the exact moment here on the chart on Wednesday when I started pulling back from longs, selling 6 different positions in the weekly options advisory that we closed this week, all of which were long biased. And you can see right here from the text that I sent out to my subscribers, this is actually, this text was sent on Wednesday, and notice the timestamp here, 2:23 p.m. I said, caution new swing longs, NDX now outside of channel, and I put a link to a picture, which is exactly what we were just looking at a second ago, which is simply that picture of the NDX. So this is how I really pride myself on taking as best care as I can of my subscribers and getting them to know all of this stuff in advance so that they can profit with me and be very, very careful. I'm a big believer in basically just keeping everybody as safe as I can all the time. And obviously that advice was pretty sage because, as you can see, Thursday led us to the 85-point gap down here, and then the follow through as well, which was really one of the biggest routes in the market that we've seen in some time. Let's get into some market internals here if we could. This is a snapshot that I took for you guys near the close on Thursday. There's a number of reasons why I wanted to share this with you, because I wanted to really illustrate the contrast of what things look like on what's called either a trending day, or some people call it a gap and go day. But regardless, these are days that can be very, very profitable for short-term traders if you know what to look for. So just a quick recap on how this quad screen works. Remember, this is the absolute bread and butter and core of the ShadowTrader methodology right here. This is basically what we teach in our Squawk Box live on the Thinkorswim platform every single day. And we've been talking about this for 15 years plus, and it really is like trading blind, I think, if you don't have these 3 internal charts up in front of you. So just to recap, in the upper left, this is a chart of the breadth as measured by volume flowing into up stocks versus volume that is flowing into down stocks, all right? It is represented in 3 different ways, actually, via candlesticks, via a histogram, and these that I call the breadth bubbles. At a glance, the most important thing is the breadth bubbles. These are free scripts, by the way, that we offer at ShadowTrader.net. Just mouse over the Stocks tab and select Think Scripts, and many of the scripts that you need to make your quad look just like mine are free on our site, okay? Pay attention to those 2 numbers up there. Do you notice that the number on the left, which is the breadth for the New York Stock Exchange, the relationship between up volume and down volume, is at minus 70.58. I just want to let that sink in for a bit. Minus 70.58, and that wasn't the highest read of the day. The highest read that I personally saw of the day, because I'm not looking at this every second. I am sometimes flipping back through other parts of the platform. The highest read that I saw was about 86 to 1. I was speaking with my subscribers in our private webinar on Thursday evening, and some of them told me that they saw over 90 to 1, okay? This is really, really noteworthy, okay? It tells you that the amount of volume flowing into down stocks at some point in the day was 90 times the volume that was flowing into up stocks, okay? Understand that on a normal day, this breadth number is anywhere from 1 to say 3 or 4 maybe. A normal day is like 2 to 1 negative or 3 to 1 positive or whatever, okay? This is 70, 80, 90 to 1, which is absolutely just insane, all right? Next, we move on to the advanced decline line, minus 2,833. This is also a huge number, and it is doing the pattern that I call pegged. Pegged means when the AD line doesn't have a pattern like this or like this, it means that it gaps down or gaps up and it just goes sideways all day. This AD line not only was going sideways all day, but it was actually drifting lower, and it was drifting lower from reads that we haven't seen in a very long time. Anything sub 2,000 on the New York Stock Exchange advanced decline line is what I consider epic. You need to basically be completely on top of your game, know that a trending day is probably happening. And just so you know, this can go in both directions. You can have a strong gap to the upside, have lots of buying pressure, have a positive 2,000 advanced decline line as well. All right, more on that in a minute. Next, we're going to move over to the ticks. The little triangles here, and again, these are all free scripts that you can add onto your chart from ShadowTrader.net. The little triangles are called tick distribution. Very, very simple, stupid method that I came up with a long time ago. I just wanted a script that would tell me when the 15-minute bar on the tick was closing above 0 or below 0. And if it closes above 0, as you can see, it gets a little green triangle. And if it closes below 0, it gets a red triangle. Depending on how many red triangles there are as opposed to green triangles, I call that the tick distribution. On a normal day, as you can probably imagine, since the tick is a pretty wild indicator, you'll usually have it relatively split. Notice that on today, almost all of the triangles are red and there's only very few green triangles. So that is, of course, noteworthy. The other thing that you want to look at on a trending type day is the fact that, see here, these are the bounds of plus 1,000 and minus 1,000. On a normal day, minus 1,000 ticks on the New York Stock Exchange, which basically tells you that at that moment, 1,000 stocks are down ticking, okay, or 1,000 more stocks, I should say, are down ticking rather than up ticking. It's relatively rare to get that number to minus 1,000 or plus 1,000. On a normal day, you might get 1 or 2 plus 1,000, minus 1,000 ticks. On this day, on Thursday, notice how many times the candlestick banged into the minus 1,000. That's 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay, this is unheard of. It's absolutely epic. You need to be paying attention when you see stuff like that. Last but not least, cumulative tick. This is a fantastic indicator. I will say this one is not free, but you can get it on our website. It's pretty cheap. It's like 95 bucks, and it's not a recurring cost. You just buy it once and you've got the code for life. The cumulative tick will usually register within the range of, say, plus 100 up to plus 1,000, maybe plus 1,500, anywhere in that range. It can have a relatively wild range. And depending on what type of day you're having, it'll build from the upside or build to the downside. Or if it's a choppy day, you'll have the histogram of yellow and purple like this. It'll be mixed. The point I'm trying to make here is that as this was building to the downside, it built out to a minus 8,500 number, which is absolutely incredible. It rarely closes this week. Again, on a normal day, if it's pretty bearish, you got minus 1,500. Maybe it's building out by the end of the day, you got minus 3,000. That's a pretty bearish read. Today, it was minus 8,500, all right? So now, remember all this stuff because it's very, very important. And this is what you want to be looking for to see how things that are happening under the hood tie in with what goes on in price action. And this is extremely important for intraday traders. I'm purposely bringing this up just after it happened this week because this is actually a question that I get very, very often via email from subscribers. They very typically, after a day like that, will say to me, Peter, how can I know at the beginning of the day that the day is going to, develop this way? Well, you won't really know it at the very beginning of the day, but you will already start to have signs from these market internals that it could be going that way. For instance, if you're going to get a pegged AD line at minus 2,000 or worse, it will not open up at 0 or minus 200, minus 500 and then drop down to 2,000. It will open at minus 2,000 or worse and stay there the whole day. So that's point number one, where you can get an advanced heads up. Point number two, the breadth. The breadth is probably going to open on a huge gap down day, like this was an 85-point gap down. The breadth is going to open at some astronomically bad number, like minus 25 to 1, minus 40 to 1. That's also a tell. It's probably not going to stay there because usually what that is it's just the shock and awe of all stocks opening lower, and then whatever volume is flowing into those stocks, obviously those stocks are down because they're opening below the prior day's close. So you get this huge sort of misread of down volume. But when you see that big number opening up, you're probably in for that type of a day, all right? Same thing with ticks. You want to keep looking at that tick. If you notice within the first hour that you've already had 4 or 5 minus 1,000 ticks. And we know that on a normal day, it doesn't happen that many times. Again, you're probably going to get a trending day. So how do you play this type of day? The point is that there's lots of money to be made intraday when you see this scenario setting up, because what it should be doing is giving you the confidence to short all rallies. If you want to hit it early off, say, the 5-minute low or the 15-minute low, go for it. It's probably going to work. If you want to wait for that first 10:30 a.m. reversal period coming up, it's probably going to work. Me personally, I honestly like to wait till the afternoon. Most of my money was made on Thursday, not day trading until about 1 or 2 in the afternoon, because I like to strike that trend line. I'm going to talk a little bit more about that later in the video, and I like to let the market come down and come back up to the intraday trend line that's there, and that's my really high opportunity, great risk reward short signal. And that brings us to this week's trade of the week, which is going to be really interesting because I'm actually going to tie it in with some very recent price action of Friday. As I may have alluded to in the intro, we had a great week in Weekly Options Advisory, but I don't want to talk about any of those winning trades actually. I actually want to talk about a losing trade from Friday afternoon. And again, because it ties in very well with the somewhat wild price action on Friday and a little bit stronger close than everybody expected, that I think is kind of pointing to more of a neutral stance going into next week. I'm not so much sure whether or not we're going to drop below that SPX 3000 or not. All right, let's get into it. All right, so trade of the week, as I was saying, great week for Weekly Options Advisor. We actually closed a lot of trades that were successful. I think we closed like 6 winners all in here. I'm not going to be talking about those trades. Again, you're completely welcome to take, freeze your video and take a close look at exactly what we were doing, why we were doing it. Obviously, the dates are here and you can see my comments. The trade I actually want to talk about for the trade of the week is the last trade that we took, which was on Friday afternoon, and it was long put verticals in the SPY for a relatively short duration, which is what I usually do, going out only to June 22nd. And you can see here that I wanted the 300 290 put vertical and was looking to pay about 310, or did pay 310, I should say, and then actually got out very quickly at 290 for a small loss. Now, why was I obviously bearish into the close, thinking that the market was going to potentially go lower on Sunday evening or next week? It still could. I mean, obviously, believe me, I'm not saying that I couldn't be completely proven wrong, but I have to follow technicals, I have to follow my gut, I have to follow exactly what I see in front of me on the chart, and that's what I'm going to show you right here as to why it didn't really make sense to me to stay short that trade going into next week. All right, so SPY, if we flip it down to a 15-minute, we know that we had a very, very key resistance here in the, call it the SPY 300 area, which, as we know, is the same thing as SPX 3000. So notice that we came into here and we tested SPX 3000 on Thursday, and we had a very, very minor bounce, correct? And this is right in here, and we closed right here. So we closed relatively weak. This was Thursday. On Friday, we rotated back down to retest SPX 3000, and then we had a bounce, and we broke SPX 3000, right? And this is actually interesting because I don't have a snapshot of this. Maybe I'll add it at the end of the video. Actually, I do. I can probably add the snapshot where when we bounced here, I actually sent everybody a text saying, hey, be careful. This looks like a look below and fail. So hopefully I was able to stop a lot of people from just shorting that blindly on the break as we were coming up. And what happened then was we bounced in the market, and let me just get my little trend tool out. I noted that the market bounced right to a trend line, right? You see this little red candle right here? Right to a trend line. And so what I was doing is, as the market came under here, did the look below and fail, came back up, I thought to myself, aha, the market is just coming up, a little bit of short covering, and it just wants to retest this trend line, and right at the trend line is going to be the short. And right at the trend line is when I sent out the text and I said, let's buy these puts. Bought those puts for 310. Perfect entry, very, very good trade location. Remember, trade location is the most important thing in trading. As you can see, if I make it bigger, that worked for all of 15 minutes. The candle closed near the bottom, and then we started rallying. And we retested the trend line, okay? This, in a nutshell, shouldn't happen. If the market already made such an effort multiple times to get down to that 3,000, bouncing, retesting, it should not have broken below and then came back up. And even if it did come back up, it should have resisted at the trend line again. But instead it didn't. So as soon as I saw that it didn't, that is when I closed the trade here in this bar for that small loss that you saw earlier when I was showing it to you, and I got out for 20 cents per contract loss because it just didn't make sense. This to me is a classic WWSHD move, which I talk about very often, when what should happen doesn't. Remember, when what should happen doesn't, it's probably going the other way. And again, in the bigger picture, I may be wrong about this, but it just didn't make sense to me at the time. And I am a very, very big believer that consistency in the market really comes from avoiding losses much more than it does from making winners. So if you have a very loss-averse mindset and you get out of trades, not out of just being nervous, but when you see clear technical dynamics that are being breached and technical dynamics that are changing, okay, that will serve you well in the longer term. Understand that what I'm doing here is nothing like just guessing and saying, oh, well, I don't like this trade anymore. Or maybe some news is going to come out over the weekend about a COVID vaccine and the market's going to rip to the upside. You see, it's none of that. I had a very, very clear setup as to where I was in the trade, perfect entry right on that trend line touch. And when the trend line violated back to the upside, that was it for me. I was gone. And that's all for this week. Thank you, as always, for spending a little bit of your weekend with me. So just to quickly recap what's going on the TA front, SPX 3000. That's what it's all going to be about next week. Multiple touches on Thursday and Friday. 200 period moving average is there as well on the daily. And it's a big round number. I mean, the whole world's looking at it, see if we resolve to the downside or not. If so, I've already shown you in the video where the 50 MA is. That's probably where the market is going to head. If you enjoy the guidance that you receive from me from these videos over the weekend and you'd like a little bit more of what I can offer you, check the link out down below, shadowtrader.net/options. My weekly advisory offers you live trades in real time, What's Peter Thinking audio messages, including some of those charts that I showed you in this video that I send out in real time to my subscribers, showing them all these important technical levels that they need to be looking for at exactly that particular moment. All right, I'm probably a little bit too old to be saying this, but please smash that like button and subscribe to this channel if you can. And one last thing to all the haters out there that are leaving a bunch of snide comments about my hair on this channel, I just want you all to know I'm getting a haircut on Tuesday. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.